An Odyssey station. Investor Schooling Live with Phil Falcone and Larry Steinhaus on Talk Radio 1210 WPHT.
Good afternoon and welcome to Investor Schooling Live. Coming to you from Investor Schooling headquarters. I'm Phil Falcone here with my business partner, Larry Steinhaus. We are the founders of Investor Schooling. Get ready to learn real estate investing and stock option trading. Call us with your questions now at 855-939-1137. That's 855-939-1137. That's right, we're a live program, so you can call us anytime during the show, and we will take your calls. Investor Schooling is located in Langhorne, Pennsylvania, serving the Philadelphia area in a real brick-and-mortar building. That's correct. We're local guys, accessible to our students, a minimum of 2 nights per week. Learn this business, and that's the business of real estate investing and stock option trading. Learn it from people who live it every day. Larry, what's happening?
So you know what's happening, Phil? We're in January, and we're in earnings season, and I'm making lots of money this week. I'm so excited.
Good. It's about time.
I know, right? So, you know, what Phil's referring to is I actually had my worst year stock options trading last year in 14 years. And it's rare, but it happens. I've actually had 2 negative years. Last year was a negative year, and one was a negative year that I actually recovered everything in January of the last year. I have not recovered everything that I had a bad year for last year, but it is what it is. But you know, we're fully open here at Investor Schooling. We show our accounts. We tell people what we're doing. We tell people about any problems we have. We tell people about bad trades, good trades. We celebrate when we have a good trade. We celebrate when we have a good buy, when we buy a good house. We also talk about when we don't. So just so you know,
and we cheer each other on.
Yeah, absolutely, and that's the cool part.
You come to Investor Schooling on Thursday night at 7 o'clock, you're going to hear a lot of clapping because there's a lot of winning going on.
Yeah, winning.
Winning.
Is that like Charlie Sheen?
Well, that's what Charlie Sheen says. He does. I wouldn't mind trying it Charlie Sheen's way. I've heard about some of the debauchery that he's involved in. It sounds like a lot of fun.
So basically, we could say this. We could say Investor Schooling is like Charlie Sheen without the prostitutes.
Okay. So.
I know I made Pedro laugh on that one.
You know what's nice about today? Our show is on at 2 p.m. every
Hey, what
Saturday.
time is it?
It's 2 p.m.
No way. It's not 10 o'clock in the morning?
We are actually on the time we're supposed to be on.
I don't believe it.
It's been so long, you know. Thanks, Susan. You know, hey, it's awfully nice to be on at 2 o'clock.
I think it's Frank's fault, though, not our fault.
I think it's all of their faults.
Yeah.
I want to blame anybody who can hear my voice.
You want to, anyone?
Yeah, sure.
All right, that's cool.
Okay.
My fault.
Yeah, it's Glenn, it's your fault. You're right.
So what do you say we get right into it?
Let's do it. What do you want to talk about?
Let's talk about CAMA plans, self-directed IRAs, Roth IRAs, HSAs.
All right, cool. Anything particular you want me to talk about? Because that's a lot. There's a lot to talk about in all of those topics.
Well, you can, take your pick.
All right, so it is now January, and you have a limited amount of time to put money away in your IRA for last year.
Good point.
Now, this is really important. If you want to put money away into your IRA, put it away now. If you are as old as Phil and I, you could put $7,000 away. If you're a little younger, you could put away $6,000. And the reason you want to do this is obviously to save for retirement. But the best part is when you put this money into your IRA, and I happen to recommend a Roth IRA, not a regular IRA. Let me tell you the difference real quick. In a Roth IRA, you put the money in and you don't get a tax deduction, but when you pull the money out, you pay no taxes. That makes sense. That's the greatest thing you can do, is not pay taxes when you pull the money out. Because you could actually turn that IRA into a lot of money, that Roth IRA into a lot of money, and never have to pay taxes on it. With a traditional IRA, you're paying money when you pull the money out, but the advantage is, of course, that you get to write the money off on your April 14th tax return this year, April 15th tax return this year, and you get a small deduction. And I'll tell you, it probably comes to about $1,200. It's not worth it. Pay the $1,200 this year, and then you'll get and you get a Roth IRA. And then you'll get to take the advantage. Now, some people don't qualify for a Roth IRA because they make too much money, and I believe it's $160,000 for a family is the maximum you can make. Hey, I see I have an accountant watching. Andrew, double check my math on that. Let me know if it's $160,000. If you want to put a comment in the comments. Thanks for watching, by the way, and also Alan, I thank you for watching too. But by the way, so just getting back to that, I think it's $160,000 for couples, and if you want to use a Roth IRA and take advantage of it, there's actually a backdoor method. You actually put the money into an IRA and then immediately move that money into a Roth IRA and just make sure you tell your accountant you did that. And then you don't have to pay taxes. I know it's a weird loophole, but it actually works, and there are technical reasons why that works. And it's simply because you can move money from an IRA to a Roth IRA at any time, but you have to pay the taxes on it when you move it. So because you haven't deducted the taxes already, you then don't have to pay the taxes on it. So it's kind of interesting, but it's a great move. It's a great way to do it. Roth IRA all the way. Then, if you want to put more money away, you put it into your HSA, which Phil mentioned before as well.
Well, let's talk a little bit about, so if you're putting the money in the Roth IRA, you have until when to do that?
I believe it's also the same thing, April 15th.
April 15th.
For last year.
Right.
Right.
And, and you can't pull the money out unless you're above 59 and a half.
Right. Well, I believe it's 59 and a half. I wasn't prepared for this conversation. And the funny part is, as I get older, I forget numbers. And I don't know why. But I can't remember the exact number. It might be 59 and a half. It might be 65. I'm not sure. But it doesn't matter. The idea is, once again, we're trying to save taxes, so we're going to save taxes.
So all we need to do is put a disclaimer on the radio show that says, sometimes Larry Steinhaus forgets numbers.
No, I like the better disclaimer that I'm not an accountant or an attorney. I'm giving advice based on my personal experiences. And because I'm not old enough to take the money out yet, I don't care.
Yeah.
We need Andrew. Andrew probably stopped watching it, so he's not giving us all the answers that we need.
Say hello to my friend Alan Apt.
Hey, Alan, how are you? You can say hello to him too.
You should type something to him.
Well, he can hear you.
He can hear. Yeah, I guess he can hear you. Yeah. Hi, Alan. How you doing, buddy?
So for you guys who don't know what we're talking about, we are live on Facebook, we are live on YouTube, we are live on Twitter, and we are live on LinkedIn. And you can, Joe's saying 59 and a half. So you can, if you'd like, you can respond to us on Facebook and LinkedIn and YouTube and Twitter and leave a message, and we will be more than happy to respond to you. And by the way, say hi to everybody. If you're watching, say hi to us. Look at that. Alan's responding to you. There you go.
How nice.
Isn't he a great? He says he's great.
It's nice to have friends.
Yeah, you have friends?
Alan. Yeah.
All right, there you go. Well, by the way, Mark Cumberland is our friend, and he was on a little while ago.
Yeah, I heard him.
Yeah, and sadly he lost a partner, Anna Green.
Yes, yeah. I know Anna very well.
I don't know her very well, but I've known her, and and I'm very sad to hear that.
Well, when my first opportunity to be on the radio was probably about 15 years ago, maybe like 2009, maybe I think it was, and Mark had me come on the show with him, and Anna was his co-host, and the three of us worked together to do maybe 3-4 months of shows.
Oh, okay. I did not know that. Okay.
Yeah.
I knew you were on the radio with. I didn't know you were on the radio that long. But yeah, Anna will definitely be missed. She was a sweetheart. Yeah.
Yeah.
But by the way, if you want to call in, 855-939-1137, 855-939-1137, and you can call in and say hi and ask us questions about anything that has to do with money. Just don't ask me what age you're allowed to retire. By the way, so it is 59 and a half, according to Joe, who probably looked it up, but it's also 5 years. So if you put the money in at age 59, you have to wait 5 years before you can take it out. So it's
Really?
5 years of 59 and a half, whichever comes last. Just so you know.
That's interesting.
Yeah. It's
Glad you brought that up.
Yeah, same thing with that I can remember. I just can't remember if it's 50. I didn't remember it was 59 and a half.
Okay.
So pretty soon we can take money out of our Roth IRAs, and we don't have to pay taxes on it.
Well, as you know, I liquidated my IRAs to buy a mobile home park.
I know, that was pretty cool.
So at this point, I don't know that it makes a lot of sense for me to start it up again.
Absolutely, you should start it up again.
Not under the current things that I'm planning on doing. I'm going to need some cash.
So one of the things you can do, so this is kind of neat. One of the things you can do is you can actually take your Roth IRA and buy real estate in it.
Yeah, I'm aware of that.
So,
but you'd have to build up that account to.
Not really. Check this out. So let's say you put, let's say 2 years you had $14,000 in your Roth IRA. and you went to buy a house that's, I don't know, let's say it's $100,000. Your Roth IRA can actually go to a bank with you, of course, and it can borrow the money, and you can actually just leverage your $14,000 just like any other real estate investment. The only problem is the bank has to agree to that loan being a non-recourse loan. They can't come after you personally. They can only go after your IRA or the property. And there are many banks who will do that. You can do it with a private lender very easily.
Okay, you want to talk a little bit about HSA?
Yeah, so let's talk about HSA. So HSA is a health savings account. So many of you know about this because your employer gives you the option to put money into a health savings account. And basically, this was done basically a few years ago. I think it was done in the Obama years, where they said, listen, all these plans have high deductibles. So let's say you have a high deductible health insurance plan. By the way, high deductible is $1,200 or more. So if your deductible is $1,200 or more, you are eligible for an HSA. The interesting part about that is most deductibles are higher than that now. Most of them are $2,500, $3,000, $5,000, $10,000, depending on the plan. But so $1,200 HSA, you can now put money up to, I believe it's $3,300 a year per person. And you put that money in, so let's say $3,300, you get to deduct that money off your taxes, just like an IRA. And the rules are the same as a traditional IRA, where it's tax deferred, and it's the same thing. It's a 5-year. I believe that one is 65, and it's that you can take it out, and it's 5 years or 65, whichever is later. But here's the really cool part: that money's tax deductible. Of course, when you take it out, whatever you have left, it's taxable. But the neat part is about this, the plan of this, let's say you go for an MRI and the MRI is $5,000 and you had a $5,000 deductible. So if you had $5,000 in your HSA, the government assumes you're going to take the $5,000 out of the HSA and pay that deductible. If you have the means to not pay that deductible out of your HSA, don't. Pay it out of your regular bank account. Keep the money in the HSA, and then that money, then when you withdraw it, you can hold on to that receipt forever, and you can say, "Hey, listen, in 10 years ago, I had an MRI, and it had $5,000. I had to pay $5,000 for that MRI, and you don't have to pay taxes on the $5,000 that you pull out of the HSA. You can actually use it then. Also, eyeglasses are covered. You could put that in your HSA. Toothbrushes, toothpaste, razor blades. Razor blades might be maybe on the fringe, but there are things that you would not believe that are covered. I mean, even dental floss is covered." So it's kind of neat. So you can hold these receipts forever and build up a really nice tax deduction off of your HSA when you pull it out. But the good news is you're not paying taxes every year. So believe it or not, you can actually buy houses in your HSA as well. My HSA right now has about almost 40 grand in it now, because of a combination of putting in money into it, and also, believe it or not, in stock options. I used that and I traded stock options with my HSA, and I built it up to, I think I did 100% this year in that one account. That was only one account that I did really, really well, after I just said I did pretty bad in some of my other accounts. But that account I did 100% in.
Nice.
So these are some cool tricks and some things that we teach on investor schooling, because it's not just about real estate. It's not just about stock options. It's about anything and everything that has to do with money.
Well, speaking of money, one of the topics...
Do I owe you money again?
Well, of course you do.
All right.
Yes. Speaking of money, would you like to talk a little bit about how money really works?
Oh boy, that's such a loaded topic. How money really works. So money is completely useless. It's completely worthless. Do you want me to go down that rabbit hole? Or do you want me to go down the rabbit hole that says that you're supposed to move money a lot? There's so many places to go with that topic that I'm not sure which one I should go down. I know, you're going to say pick one.
Why don't you pick one?
Yeah, I knew that you were going to say that. I don't know. It's a tough one, because this is one of those things where you have to kind of like have a lot of knowledge about money to understand where I'm going to go with this. And the first thing you need to understand is money needs to move. You can't have money sitting in a savings account at 0.001% interest and ever expect it to do anything for you.
That's for sure.
You have to take money, you have to borrow money, you have to use other people's money, and you have to leverage your money, and you have to continue to just keep building it and building it and building it. And then when you have assets, you need to borrow against those assets to get more money. You and I are both Monopoly fans. By the way, one day you and I have to play Monopoly, and we just haven't yet. But we're both Monopoly fans. Now, when you were...
It's just do you realize you have no chance of winning?
That's why we have to play, and we have to film it. because I want to show when I kick your butt in Monopoly, I want to show the whole world that I kicked your butt in Monopoly.
I haven't lost in Monopoly since 1974.
Well, that's fine. We're gonna have to test that theory and see if it holds. So one of the things that in Monopoly that most people don't know is if you have 2 or 3 properties and you land on another property and you don't have enough money to buy the property, what did you do?
Well, the way that my family played is we invented our own rules.
Yeah, that's why you won since 1974. But we're going to play with the rules of Monopoly when you and I play.
If all the players of the game agree to the rules, then what's the difference?
No, because we have to play by the rules just for our competition.
No.
I'll play with your rules just for fun anytime. But I want to prove to you that I'm a better Monopoly player than you.
The reason we changed the rules is because the rules of the game, a lot of them are not realistic.
Right.
Like, why do you have to go around the board before you can buy something? That's stupid. All right?
Because you have to turn 18.
It has nothing to do with turning 18.
Well, that's the metaphor.
I was 9 in 1974, so it had nothing to do with turning 18. Okay? The point is that, another thing that we changed in my family was that you're allowed to negotiate with other players at any given time, even if it's not your turn.
Yeah, that's actually a great one. I like that one.
Right. Because in real life, you can be negotiating multiple deals.
Right.
And that was exactly why we changed it, because my mom wanted us to be negotiating more than just one thing. Why wait for your turn and then just do it then? Okay?
Okay, but you didn't answer my question.
I never answer your question.
You had 3 properties. Whatever they are, you have them already. You landed on another spot that you could buy the property, but you don't have the money. How did you buy that property?
One way you could mortgage.
That's exactly right. You mortgage the properties.
Right.
Most people wouldn't mortgage the properties because they didn't know they could, and they didn't know they should.
That was the first place I learned. That was the first place I learned that you could do that.
That's right. That's why when you go to buy another property, if you don't have the money, buy another property from someone else. Buy another property. Borrow money from the bank, or borrow money from someone else, and go buy the property. Other people's money, right? We teach other people's money.
Yes, we do.
You borrow a lot of other people's money.
Well, I have borrowed a lot of it. I haven't borrowed a lot of it lately, but I have in my life borrowed quite a bit.
So do you know what I refer to as other people's money?
OPM?
Yeah, but no, those are the initials.
Yeah.
But
that's the acronym.
No, that's the initials. Acronym is a different word. That would be UPM.
Go ahead. Where are you going with this?
I refer to other people's money as any money that's not mine. That includes banks. That includes credit cards. That includes, I don't care, personal loans. It includes any loan anywhere that I get money from that's not mine is other people's money. Now, most people refer to other people's money as like a friend who has $1 million in the bank and lends you money. That's fine. That's another place to go. But just keep in mind that any money you don't use, that you don't have, that's your own money, is other people's money. And when you teach that, and when we teach it and you learn it, it makes more sense.
Do facial expressions work on radio?
They do on Facebook Live. So so people are seeing your facial expressions, and he's like disgusted with me at the moment. So fine, Phil, what do you want to talk about?
I actually didn't even write a script for today's show, so you could talk about anything you want. Anything on your mind?
Well, I don't know, but some guy wants me to make a reference to President Poopy Pants.
Yeah, so go ahead.
So here.
Make him happy.
President Poopy Pants. Did that make your wife laugh? Tell me if you made your wife laugh because I said President Poopy Pants. All right, there we go. You know where that came from?
I typically would never make fun of somebody who's done something that I've done.
But did you do it while you were visiting the Pope?
No.
See, if you did it while you're visiting the Pope, I would make fun of you.
I've actually never visited the Vatican.
No, I'm sure you haven't, but...
I couldn't get in anyway. The walls are too high.
You mean they have...
Even though the Pope had a problem with Donald Trump's wall, his wall was what, 47 feet?
Well, you do notice that everyone who has a problem with Donald Trump's wall has walls.
Yeah.
Nancy Pelosi's fence and, and I don't know. It just goes on and on and on.
So Thursday night I was talking a little bit about wholesaling. Would you like to talk about the Mao Formula?
Go for it.
And what you used?
No, I want you to use it this time because now it's your turn.
Okay. Oh, so I got to get to answer my own question.
You get to answer your own question. Wait, while we make this easy for you. Hey, Phil, what's the Mao Formula?
So
is that a Chinese formula? Is that like when you order like the...
Yeah, you have to meditate, and then you'll know what to offer for the house. That's how it works.
I thought it was that chicken that you get in the Chinese restaurant. Oh, no, that's General Tso's
So
chicken.
the Mao Formula stands for maximum allowable offer. So say you're looking at a house that you're thinking of doing a wholesale deal for, and most of Philadelphia knows what a wholesale deal is, so I'm not going to explain it. But what you do is you come up with, your after repair value, and one of the ways you can do that is by, if you have a real estate license and you have access to the MLS, you can go on and look at comps, and you can come up with a pretty good idea of what the after repair value of a particular house you're thinking of buying is going to be worth. All right? But you haven't seen the house yet. So you make an appointment with the person to go look at their house, and you bring the comps. Maybe what I typically do is I email them to myself, so they're on my phone and I can just look at them. I don't necessarily want to lay them out on the dining room table and have a discussion about it. What I want to do is just know that number. And then when I go to look at the house, the very first thing I do is I ask for a quick tour of the outside of the house and the inside of the house. And what I'm really looking for is I'm trying to calculate how many repairs the house needs. So let's just say that the house was a $100,000 house, just to keep the math easy. That's what the houses are selling for. Not that there's a lot of $100,000 houses selling these days, but
I bought one yesterday.
But there's certainly neighborhoods that have them. Yeah. So what you do is you multiply your ARV, which is 100,000, by 0.70, and what you're doing there is you're setting up your number to have some profit in it. And then what you also do is you walk around the outside of the house, the inside of the house, and you calculate what the repairs are. And let's just say in this case, the repairs are $15,000. So what are you going to do? What is your offer on this house? You're going to offer $55,000 for this property. And that's what the maximum allowable offer, or the Mao formula, is used to calculate what you're going to offer.
So there's one problem with that.
What's that?
If you're wholesaling that property, that's what a retail buyer is going to offer you. So you need to offer less than that because you need to make money on the wholesale.
Well, one of the things that I always do is I always use a large number for the repairs. My method of estimating is, as you know, is verbal.
Sure.
So I look at the house and I come up with a number. And I simply pad that number because...
Well, you have to anyway.
You have to. It has to be done. So it's better to do it that way than it is to get into actual explanations of how much the roof costs, how much the siding costs, because the next thing you know, you're getting into arguments about what things cost, and I don't want to do that. So I come up with a one number, and I say this house needs $22,000 worth of repairs, and then I use that number, and there's some negotiation in that number. If the person's a good negotiator, I'll make some adjustments, but I don't get into writing down specifics that can just be used for arguments.
Understood. By the way, if you're listening online, I'm sorry, if you're listening in your car, or if you're listening anywhere else and you want to have any questions, 855-939-1137, 855-939-1137, and if you're watching on LinkedIn and Facebook and YouTube and Twitter, please leave comments. We don't know if you're watching unless you leave a comment. Even if you just want to say hi, we'll say hi back. That's no problem. So 855-939-1137, and again, if you're watching online, even just say hi. Or if you have a question online, we'll read it to the audience and we'll answer it for you.
You want to go to a commercial?
We can do that. Let's go to a commercial.
Yeah, why don't we do that?
Hi.
All right. I like this music. It's awesome. All right. Welcome back to Investor Schooling Live. I am Larry Steinhaus. I'm here with my business partner, Phil Falcone, and this is Investor Schooling Live. And we are so excited to have you. And if you have any questions about real estate, stock options, the stock market, IRAs, or anything out there that you want to talk about, 855-939-1137, 855-939-1137. Come on, man. Come on. Hey, listen, there's a question actually posted on Facebook right now. It's from Mark. He says he's interested in real estate, but he's not very handy at least these days at age 61. So he's not handy at age 61. I'm not that far away from you, by the way. How do I hook up with a younger guy or girl that can handle the physical side of things while I supply the dollar side of the equation? If you start subbing things out, you slowly erode into your profit. So his basic question is, how does he hook up with a younger guy or gal that can handle the physical side of things? Have you tried Match.com? All right. So Mark, first thing I would do is absolutely show up here this Thursday night. Go to investorschooling.com and RSVP for this Thursday night. And I promise you that we're going to introduce you to a lot of younger guys or girls. Not that type, though. So if you're ready, come on in, and we'll teach you how to do it. It's very easy, and what you'd want to do is actually very smart. But I'll be honest with you, I am not that far away. I'm 58, and I have no problem with doing this business. And guess what? I don't pick up a screwdriver or a hammer or a nail or anything anymore. I used to do that when I was very young, and I realized that was actually a big mistake. It actually cost me more money for me to do it myself because of the time that I was giving up, not being able to make other money or buying other properties. It was much cheaper for me to hire somebody else, even though the dollar amount was higher. What do you think of that, Phil?
I think Mark needs to show up Thursday night at 7 o'clock.
Absolutely.
To investorschooling.com. And you should show up in person, especially for your first meeting. It's really important.
Yeah.
And come out and meet some of the people. Typical meeting for us on Thursday night, we'll have 30, 40 people in the room, and we'll have about that many people on Zoom as well. So you could be talking to 70, 80 people on Thursday night, and it's an important place to come.
Absolutely. And if you have money, we want to talk to you.
Sure.
I'm sorry. Did I say that out loud?
You did.
All right.
Why not? Everybody needs money to make things happen in this world. So,
Yeah.
And borrowing money is a wonderful way to do that.
Yeah, and we teach a lot of different ways to make money in real estate, and some of them have nothing to do with owning real estate. You don't have to own the real estate to make money, and one of the ways is obviously lending money to other people. And as long as you do it right, you will not only will you eliminate the risk of losing money. In other words, you can't lose money, but you actually want the people who borrow the money from you to default. When we teach you why that makes sense, you'll understand. Now, no one's ever defaulted. I've never defaulted. Phil's never defaulted on anything that we borrowed from a private lender. But I will tell you, just so you understand, when we teach you how to lend money, we're going to teach you how to lend money so that you're like, yeah, okay, I'll lend you money. Please don't pay me, because you make more money if they don't pay you. All right, what else we got, Phil?
Well, you want to talk a little bit about cap rates?
I'm going to let you talk about cap rates.
Okay.
Because, I'm fuzzy in math.
No, you're not. No, you're not. So cap rates are just one of the ways that you can evaluate real estate. So typically speaking, if you're looking at a commercial piece of real estate, it generally has what's called a cap rate on it. And the cap rate is a loose number that reflects the rate of return you should get on your money that you're investing in, right? It's a loose calculation. I don't put too much weight in it, but it's something that you got to look at. So typically if you see the higher the cap rate, the better the deal. And typically you want to see double digits on it if you can get it. Or maybe something with a 9 in front of it is like kind of the minimum of where I want to operate. A lot of, if you look at an apartment building that's, let's just say a typical run-of-the-mill apartment building in the area that you live in, those properties are typically selling for about 6% caps, which is not a very good number. So I don't necessarily recommend doing deals like that unless the property has something special about it that can allow you to make a bunch of money. For example, one of the special characteristics might be that the rents are unusually low. You've got a very bad landlord who is not raising the rents like they should. That would be something that would make me take a second look at the property, not worrying so much about the cap rate if I know that I can pop those rents because they're way under market value. Another reason that I might be interested in something that has a low cap rate would be if there was something in the property that I could change that would save me or make me a bunch of money. For example, I used to own an apartment building, and when I bought it, all of the tenants simply got free heat. Okay? They got all the heat was paid by the landlord. It was just included in the rent. And what happened was the heater was the size of a Volkswagen. It was enormous. And it took up this utility room. It took up the whole utility room. It could have even been like an illegal apartment if I wanted to convert that room into that. And what I did was, in the summertime, I had a crew come in and rip apart the heater. The heater had cost me, in actual energy cost of oil and electricity for that thing to run, $6,800 a year. So I had a crew come in, rip it out completely. I spent $15,000 of my own money to upgrade. There were 7 apartments in this apartment building. I upgraded all the electrical panels, and then I put in electric heaters in each and every apartment. So now, what did I do? I saved $6,800 a year in oil expenses, and I transferred all of the heating in this building to each individual tenant. And that was the main reason that I bought it, because I knew that I could really turn that property around and have it really kicking off a lot of cash flow. And it worked out beautifully. And then I ultimately sold it at a very handsome profit.
Yeah, I remember that apartment. That was a very good deal you got on that one. Awesome play, man. I like it. That's a value-added play, isn't it?
I also did an option with a guy.
Right.
I did a lease option with a guy to buy the building for 3 years. And he was a good dude, and I really thought it was going to work out. He lost his job in the 3rd year, and he no longer qualified for the loan. And he got back most of his money anyway, because he got to keep the profit for 3 years from the building. He was making about $25,000 a year off the building, so he didn't make out that poorly. But
think about this.
I made out well.
So think about this. So this guy, so we'll talk about the lease option in a second, but let's just talk about the lease part for a second. He leased your entire building.
For 3 years.
Right, and then he leased that building, he leased the individual apartments to somebody else. So he did not own the building. Right. He actually became a real estate investor without owning the building. All he had to do was lease the building from you and make your payments. Now, it just so happened that his intention was to buy it, and he gave you what's called a non-refundable option consideration, which was an amount of money for you to keep the price at a certain price for the next 3 years. So if, let's say, you set the price at $500,000, for example, and the building was worth
I'll tell you the real numbers.
Yeah, please do.
It was $60,000.
Right.
Okay.
He gave you $60,000.
He gave me $60,000. So $30,000 was for me personally. Mm-hmm. The other $30,000 I gave back to him after he did the renovations. So part of the deal was he was going to do $30,000 in renovations for 3 lower level apartments that were destroyed by the flood.
Okay.
Right. I got to keep $30,000. And then as he completed each apartment, I gave him $10,000.
Oh, okay, great.
So I paid him back.
That's actually great. So basically, this was your lease contract, which said
it was part of the lease.
He renovates it,
right.
and then you pay him back because you wanted to make sure that he was going to meet his obligation.
Right, it's the only way I could make sure he would do it.
Right,
and then he put up the initial money, and then I would just reimburse him.
Right, and then what he continues to do is he continues to collect the rent. And he makes money on the rent just as if he owned it, even though he doesn't own it. So if you guys don't believe that you could not own, but invest in real estate without any money, I mean, this guy, it cost him $60,000, but that was part of his agreement. But you can do this. You can lease a building from somebody, and then lease it to somebody else, and you make the you make the difference in profit.
Right. Well, I mean, it was a really good way to do it because one of the things, a lot of people who either believe they can't buy a commercial building or want to buy a commercial building, but they don't know how. This particular lease option was very attractive to him. He had cash, right? And he figured, this is great. I get to test drive Phil's building for 3 years, right? And it didn't cost him that much money because I reimbursed him the $30 that he put up for the unit.
Sure.
But he did manage the property, and he was going to buy it for an inflated price, but he never did because he lost his job and he couldn't get qualified for the loan.
Understood.
So ultimately, I sold the building to somebody else and made a bunch of money, and I actually made like another $40,000 because I actually sold it for $40,000 more than he would have. He had a locked-in price to buy it.
And technically, if he wanted to, he could have put the building up for sale with his lease option taken and made that $40,000 by himself. He just chose not to, and I know you guys had an agreement. And you just let it go. But it's really a neat way to buy buildings is with a lease option. There's absolutely no reason why you can't. So if your credit's damaged, you could do that. Also, if your credit's damaged, of course, you could borrow money from a private investor. Mark wants to lend money. It sounds like to everybody.
Yeah, I mean, I could think of reasons where you don't even have to have damaged credit. It still can make sense.
Sure.
Because you're dealing with a person as opposed to an institution like a bank. You walk into a bank and you want to talk to them about a way to do a creative deal, forget it, man. You're not getting anywhere, okay? But find an individual who has a problem or maybe he has cash, but he has a problem getting loans, something along those lines. You can work magic. You can solve his problems, and he can solve your problems, and you both can make a deal that will work for each of you.
Speaking of banks, so I have a bank. I'm in the middle of a few refis, and I got to tell you the funniest thing. One of the refis, it hasn't fallen through yet, but it's about to fall through because the bank came back to me and said that there was pictures. So the appraiser went out and took pictures of the place, did his appraisal. It appraised for a very high number. They're going to lend me the money on it, no problem. But they said that one of the ceilings showed signs of a leak, where the paint is chipping and, you can see stains. So the bank comes back to me and goes, we need to get a roof report before we can lend money on this. Now, it doesn't say anything in the appraisal that there's anything wrong with the roof. In fact, I know the roof happens to be new because is it your nephew, your wife's nephew put it on? John?
Yeah, his Pace Roofing.
Yeah, right. But anyway, so he fixed the roof. But wait, you have to hear this. The floor that this is on the first floor, where the water damage is on the first floor, and there is a second floor above that, which of course has what? A bathroom. So they're telling me they can't lend me money on the roof leak because somebody overflowed the bathtub and stained the ceiling. This is what the bank wants. They want a roof report because someone overflowed the bathtub and stained the ceiling.
Well, I'm not surprised.
Yeah, it's insane.
So I heard you say the other night that you were buying 5 properties?
No, I'm refinancing 5 properties.
You're refinancing 5 properties.
Right.
Okay.
Yeah.
So it was nothing new. You were just refinancing.
No, yeah, just refining. And the only reason I'm refinancing them is first of all, the rates, that's it. We're not going to get 3.5% interest rates ever again. So let me refinance now while I can, while the property values are really, really high. I'm pulling money out of them because I may want to buy the properties or do whatever I want with the money. I'm going to pull the money out of them. I'm going to have a really low interest rate, and then I'm going to pay them off early anyway because that's my intention. My intention is to have every one of my properties paid for within 10 years. But at the same time, why wouldn't I not refinance it? This way I have more money in the same payment going towards principal instead of going towards interest. So the bank doesn't make as much money, I make more.
Well, I'm doing a little bit of that now. I've talked to the bank that financed Executech.
Oh, good.
And they have agreed verbally that they will be able to lend me up to the initial loan that I had with TD Bank up front.
Oh, that would be great.
And then SBA will just subordinate as long as I don't go above what the original loan amount was.
That's great.
So
wow.
I should be able to pull out a lot of money from that. I could theoretically pull out. I don't know what the number's going to be, but
you'll be wearing one of those gold chains with a gold dollar sign and diamonds on it.
Well, let's assume it could be $700,000-800,000 or something like that, right? But maybe I could use that money to buy a house in Florida or whatever it is I want to do.
That'd be fantastic.
Right? So I'm waiting to see how that's going to shake out. But
good luck with that.
Yeah, I think it's going to work out pretty good.
Sure. And for entrepreneurs like us, where we have businesses, it's just difficult. It's more difficult to get a loan. Not hard, just difficult. More difficult to get a loan. Such a pain. By the way, 855-939-1137. If you're listening, 855-939-1137. I realize everybody's used to us being on at 10 o'clock, but hey, it's 2 o'clock. We're on now. Listen to us now. Give us a call now. You know, as soon as you ever notice that as soon as the calls start coming in, like people get used to us at 2 o'clock, all of a sudden we get that phone call. We're moving you to 10 o'clock because we have a game and we don't want anybody to listen to your show anymore. And then when we move you back to 2 o'clock, no one's going to listen to your show again.
I think we should move to another radio station.
I think we should do that too.
I think we should go somewhere where we actually are on at the same time every day. And that would be lovely.
I think the only problem with that is, producers like Glenn Page, who's our producer today, he'd be upset. He would miss us.
Yeah.
Would you miss us, Glenn? He's not even listening.
Yeah, that's how much.
Hey, listen, if he's not
cares
listening,
about us.
I'm doing like work stuff, guys, for the next show. What's up? What, you need a break right now?
No, we don't need a break. We were just saying that we would miss you if we went to another radio station because Susan keeps moving us.
What I'd really like to miss is not you, but the damn commercial we keep asking you to get rid of.
All right, I got to do stuff here unless you need a slot.
No, go ahead. Go back to work. That's okay.
Thank
You
you.
can ignore our show. That's
Yeah,
fine.
yeah, sure.
Hey, listen, Phil, now's the time to curse on the air because he won't know it and he won't dump us. So make sure you say every single word that, that sounds, that sounds really bad.
Do you know any good curse words?
Maybe. I don't know. I'm gonna see if I could actually think of some really good curse words to say while he's getting all upset. I can't find my bleep track. It's gone. Oh well. So much for that. I was gonna go through the whole bleep thing, but I can't do it.
Pedro went in and deleted a lot of those stupid buttons.
Oh, there it is. Hey, ready? Hey, Phil. You.
You guys better not curse. I'm taking a call.
All right. Tell us who's on the air then.
Is this Sid?
It's what?
Sid.
All right, Sid, I'm going to ask you to hold on the line.
Sid
Oh, there you
Vicious. We got Sid Vicious on the line.
So we should wait for Sid. Let's see how long it takes for Glenn to put it up in the computer and tell us that Sid's on the line.
It's going to take a lot longer than
there?
it does for him to get rid of that commercial.
He's there.
Oh, Sid, what's going on, man? How are you?
Good. I'm a little confused.
Wait, you're a little confused. Have you been listening to our show?
I'm confused at why you would refinance on your properties, pay a closing cost, which is what I was going to have to do, when you're paying it off far sooner, and you'll be paying a lot less interest.
All right, because this, and that's a really good question, by the way. So the difference is my interest rate on my private lenders on these 5 properties is 8%. And I'm refinancing for 3.5%. It's a major difference in interest rate. So that's the biggest reason. However, there's another reason, and I'm going to tell you the other reason. When you're dealing with private lenders, so I like to overpay my mortgages. So in other words, let's say my mortgage payment is $700 a month. I may send the bank $1,000 a month. Right. This way, and my goal in this is to get them paid off in a certain amount of time. I re-amortize them. I have an amortization schedule on all my properties, and I figure out how I can get them paid off in 7, 8, 9, 10 years, every single one of them. So, and I keep working on that, and then when one gets paid off, which I'm about to have 3 or 4 paid off this year, and then I'll take that money and put it to the next one. They call it the waterfall method, and I'm doing that. The problem with I'm getting down to mostly private lenders now. And the problem with private lenders is they don't have a computer program to figure out if I paid an extra $300, what my new balance is, how much is supposed to go to principal, how much is supposed to go to interest. So, because you got to remember, these are just average people who have money in the bank, and they were getting 1% interest rate in the bank, and now I'm paying them 8%, and they're all excited about it, but they can't figure out how to apply my extra principal to their loan. So I've taken these 5 properties, refinanced them, and they will be next to be the ones that I will pay off early. Those are the two basic reasons.
Okay. At 8%, I would refinance too. I mean, my house, I was at 4.3. They wanted to go down to 2.9.
It's not that much of a difference.
That person said it isn't much of a difference. So if I paid off in 10 years, I'm still paying less than the 2.9.
Right. Well, what you should do is if you have an amortization schedule Excel spreadsheet, for example, plug both in, find out what the interest, how much interest you're paying, and then also find out what you would be saving. But here's the thing: most of the interest that you pay is up front. So it's in the first 5 to 10 years that you're paying the interest. So if you're already 15, 20 years into the loan, you're better off never refinancing because the interest rate, because the amortization schedule is telling you that you'd actually cost you more money if you re-amortize it.
Right. I must be lucky because my lender has it right on the computer where I can add principal. It shows the interest.
Most do that
add
now.
Principal, boom, and I add at least it's a $1,400 a month payment with interest, $1,599 now, and I put on an extra $1,000 every month.
That's fantastic. That's fantastic. Yeah, that's fantastic. So you'll have your property paid off very, very quickly. That is actually a really great idea. Is that your primary residence?
Yeah.
Do you have any investment properties?
No, not yet. I was actually thinking about coming to your seminars.
You actually should, and we have to tell you, they're not seminars; they're actual classes. So this is actually the difference between us and other people. We don't give seminars; we give classes. So basically, you will be attending a class that people have paid for, and the reason we do that is we want you to actually get an experience and actually see what it is. So you should go to investorschooling.com and sign up. But I'm going to tell you right now,
someone like
go ahead.
With someone like myself, I have perfect credit, 850. Is my credit.
I make fun of people with 850 credits, but I'm not going to make fun of you because it would take too long to explain why.
And I have debt.
Good.
Own 70 on the house.
Okay.
That's it. And I have about almost 8, maybe 9 in investments in stocks.
Okay.
So you're telling me that I'm a great candidate for your classes to where I can get passive income.
Yes. Did you say 8 or 9,000 or 800 and 900,000?
800.
Okay, good for you. So we would tell you how to make more money on your money.
Any of my money.
You'll make more money on your money. What kind of interest rate are you making on your money right now?
Well, right now, I don't keep it in the bank. It's in stocks.
Okay, good. What'd you do last year approximately?
Since 2015, I'm going to go since 2015. I'm at 104%.
Okay, great. That's so in 7 years you made about 7% then. So I'm sorry, over 10 years. No, not 10 years. So about 8 years you made closer to about 12 to 13%, which isn't bad. That's not bad. But we would teach you how to do that consistently and actually even make more. But look, it's up to you. It all depends on your risk tolerance.
I hear you.
So I would definitely show up. So if you can, if you're local, go to investorschooling.com, show up this Thursday, remind us who you are, and we'd be more than happy to shake your hand and say thank you for coming.
Awesome. By the way, I like your show. You guys are very funny together.
No, I'm funny. We're just together.
What you mean is that I'm funny and Larry just laughs.
No, Phil just has a funny voice.
Well, he's not funny like a clown.
Are you trying to say I'm a clown?
That's exactly what he said.
Right.
Everybody thinks you said I was a clown. Well, fine. You do not show up this Thursday because I don't want to teach you how to make more money.
No, I'm definitely showing up there.
You see, the reverse psychology works every time.
Yep.
All right, Sid. Look,
all right.
We look
guys
forward
have
to
a
seeing
great
you.
Weekend.
Thanks, man. We look forward to seeing you on Thursday. Take care, man. All right, what else we got, Phil? Now that everybody called me a clown.
I think it's time to talk to the stock option consultant. Is he in the bathroom?
Talk about clowns.
Yeah. Is he in the bathroom?
I don't know. Let's find out.
Wow, those are great sound effects. Sure.
We got Warren and King of Prussia if you want them.
Oh, wait. Let's bring. Who is it, Warren?
Yes, sir.
Warren, come on. What's going on, Warren? What question do you have?
I want to know how can I make more money, invest my money and just start, doing the right thing with it, because it goes so fast,
Hey, listen, I'm going to tell you right now that Phil and I have so much money, we can't spend it fast enough.
If you go to Valley Forge Casino, you will.
You're right.
Actually, it's funny you should bring that up. We both love investing. We also like gambling. So a lot of our money does go to places like the parks.
But now it's Oceans in New Jersey.
Yeah.
I love them places, man.
Hey, listen, get to your question really quick. We got about
invest,
we got about a minute because I got to make some stock tips. So, what's your question?
Okay, yeah, well, I'm doing stocks. I'm doing APTY, Pfizer, Tesla, things like that.
Cool.
But it's moving so slow that I'm just trying to. I'm actually about to do an ice cream truck as well. But I'm just trying to put this capital somewhere where it can generate.
You definitely need to show up.
Be successful.
All right, I'm going to interrupt you. Show up this Thursday. Go to investorschooling.com. Show up this Thursday. Tell us who you are, and I promise you, I'm going to show you 5 more ways to make double the amount of money that you're making now, and probably 3 times the amount of money that you make in your best play you ever made in the casino. How's that?
I love that. That's awesome.
Cool, man. We'll see
I look forward to seeing you guys.
We'll see you Thursday night. All right, it's time. He's out of the bathroom.
He was in the bathroom a long time.
Hey, you know.
I hope he's okay.
I'll have to double check and see if he washed his hands. All right, it was an awesome week this week if you were in the right plays. And the right plays were, believe it or not, the travel stocks. How long have I been saying that, Phil?
A long time.
For about a
6
month,
months.
right? No, yeah, it's true.
Well, you've been talking about it for 6 months.
But for the last 6 weeks, it was incredible. I've been saying, buy it. And sure enough, AAL, CCL, Delta Airlines, all of the travel stocks, I killed it this week on the travel stocks. It was such an awesome play. I sent out a text message Friday. And do you get the text message, Phil?
Yes.
So what did I say to buy on Friday?
Facebook.
The second it opened up, I said, buy Facebook right now. And sure enough, it was down 2.5 points when I sent the text message, and it closed up 5.5 points. So that was an 8-point spread from the time I told you to buy it to the time. And most people sold it by Friday afternoon. So did I, by the way. Mm-hmm. Most people sold it by Friday afternoon and made 20, 30, 40, 50%. I bet you that would be almost as much as Warren makes every time he goes to the casino.
Depends on how much money Warren has in the market.
That's exactly true.
Yes.
The next play also is Apple. Apple is going to be a good play. It was stalled a little bit on Friday, but it's also a great play. I think it's going to I believe Apple's going to hit 200 shortly. Now, when I say shortly, I'm always about a month or 2 off, but that's fine. It'll happen soon. My computer's in slow motion, so I can't tell you where it is right now. I don't know why my computer's in slow motion, but my computer's in slow motion. So Apple right now, okay, there you go. Apple's at 173. Apple's going to be back over 180. I'm actually going to say Apple will be back over 180 by the end of the month, only because of the earnings coming up, and everybody knows it's going to be a great earnings. So that's why we definitely go into Apple. I like it a lot. You know what? I've been back into Nikola. Now, Nikola I gave up on a while back, but now it's ranging, and it keeps ranging between 10 and 11, 10 and 11, 10 and 11. Now, for you guys who invest in stocks, 10% every couple of weeks isn't bad. If you bought it at 10 and sell it at 11, and then buy it again at 10 and sell at 11, you keep making that 10%. That's great. But if you're doing stock options on this, you're doing 30 to 70% every time it vacillates from 10 to 11. That's great numbers. So if you're a stock options player, you really will like Nikola a lot. I also like the idea that the SPY is a good play as well. Every time it drops down, so if we have another bad day, like another, 80 to 100 point drop in the SPY, absolutely just buy the options on that for the next couple of days, and you get the quick dead cat bounce, and you make money on it every time. Anything out there that you're working on, Phil?
No, I was in CCL and AAL, and I'm out.
Yeah, I'm out too. Right, I'm actually waiting for them to drop again. I'd like to see. You remember on Thursday I said I bought that put on AAL, and I bought that 19 put.
Yeah.
And everybody said, "Oh, you bought puts again," because I always make fun of myself because I buy puts. So I bought the 19 strike price put on Thursday, and the stock was at $19.50 when I bought it. And sure enough, I paid like 20 cents for it. And sure enough, within 2 hours of opening on Friday, the stock was down to 18.5. I almost tripled my money on that play, and I sold it. So it actually turned out to be a really, really good play.
Well, I'm glad to hear that you're hitting it again, and then you're hot.
Yeah, it's great.
Right.
I'm actually up quite a lot. I mean, in profit, I think it was 50,000 in profit since the beginning of the year, and that I've actually taken. Where I've actually sold the stocks and kept the money. Mm-hmm. So it's actually it's been a great year so far, and we'll see what happens. January always is a good year. We got 40 seconds. Phil, take us out.
We'd like to thank our buddy Glenn Page for helping us out today, and I hope somehow, some way, The ad we've asked him to remove for 6 months now will be gone next week. I hope that can happen. Come to investorschooling.com for your free class this Thursday night at 7 p.m.
No, you got time. You got 10 more seconds.
8.
You can call us at 855-939-1137 if you got any questions. See you Thursday night at 7 p.m. investorschooling.com.
This program is a paid commercial announcement and in no way
You are clear.
Thank you.